All right. Okay, so let's just not waste any time, right? Excuse me. So on the day, right? On the daily, well, actually, let me go to the weekly because that's kind of what we've been starting, right? So on the weekly, I have these two fibs drawn, right? One fib is from swing high to swing low, and another fib is um measuring the gap. So again, the 50s, just like I think the Sunday analysis for like the 39 something and then those numbers, right? So just observing like what price does in those areas as we approach deeper into the gap. We're still not at the 50% of the gap yet. And I still have the potential weekly range at no, we're at 99 points, but again, this is me testing something out that I've been trying to figure out. So now that I have an actual rubric, I can work with that. But nothing really crazy on the weekly. We just entered inside the bearish order block. Daily, we finally had the actual break or shift in market structure or whatever. I take it out this way high. Taking out this swing high. And in this motion that we have a low, right? And then a high, and then a lower low, and then a higher high. If you know, you know. No, I'm kidding. I'm not gonna be that cryptic. That's the formation of a breaker, right? A bullish breaker. So we have a bullish breaker on the daily. We have a daily bullish breaker right here. Yeah, that's what that is. That is not what I wanted to do on the right side. Okay, great. Yeah, that seems so bright now. Let's put it like 25. Okay, so we have a daily bullish breaker, right? And again, we're looking to draw up into these gaps, and what happens there, that's what you observe. But retest, so far we have done a retest of the fair value gap that we made, right? From this low, or from this high of this candle to this low, this wick reached into this area, right? So and we also have I think today, what's the news today? I think today's news is hold on, I gotta check. I'll pause it real quick. Okay, so today is like high impact CB consumer confidence at like 10. So I don't really think, unless whatever price shows me, that NY open is going to that opening range. I don't think that's going to be the optimal conditions. I think we'll have to wait until like probably like 9:50, 10 o'clock to see what the actual move is going to be, or at least for the volatility to kick in, because unless you know what you're doing, you don't really want to be in it while the volatility is going crazy. So that's a daily really. We just have the breaker formation and the gap. So we're just looking to see what we do from there. 8 hour, nothing really crazy. I mean, the same breaker because it's fractal, so you're gonna see the same pattern. But on the 8 hour, we've really just been ranging, honestly, so far for the week. Because we're most likely waiting on GDP to make like the true move of the week. But this early week, this Monday to Wednesday, you're looking for certain highs and lows. All right, so if you're anticipating a bullish week, you're looking for the week's low to be set anywhere between Monday and Wednesday. And so far, the low of the week we have is like on the cusp of going into Tuesday, right? So we still have to permit Wednesday's trading range to see if we draw lower, but normally Tuesday is the day that makes the weekly low, according to some studies that I've done. So in a 4 hour, okay, potential bullish OB right here with this Asian range. Move that to the 1 hour. potential bullish will be expansion higher that created a gap and took out a swing high. So we want to see what price does entering this range, or mainly the range of the whole candle. But normally you want to see, you don't want, with OBs, you don't want, you don't want price to be, you don't want price to come all the way to the bottom of an order block before it bounces. It normally just needs, like, especially for a bullish one, it normally needs the range of like the high to the open. So we're looking to see what price does in this area. Right, okay. It's kind of weird. Yeah, we're looking to see what price does there. And then depending on how this 4-hour candle closes, we'll have a potential gap. Right, so just keep that in mind. Label that. 12 is right. And then I'll just keep it on a 4-hour. I don't want it overlapping. Okay, now on an hour, we have Asia's range, which again is above average, but the VIX is still above 20. So above 20, normally the ranges are a little wider. But yeah, nothing really. Oh wait, I need to do that. Okay, yeah, so obviously you see that we're ranging. Like London Open really set like a search and destroy candle. Like it swept buy side and then it swept sell side, and now we're just ranging inside of that candle. So nothing most likely will happen until 9:30 open, 10 o'clock. Where I think we're going, I'm not really trying to hold a bias, but if I'm going on the fact that the weekly low most likely occurred with this low, most likely if you're bullish, right, then the target would be the previous day's high, which would be this London high, so like 39.48. And then we'll have to observe what price does higher, because we also have this range of liquidity to potentially attack as the week goes on, and that is like 40.30. Yeah, that's like 40.30. So if I'm going by that potential weekly range, right, that was like, I think it was 99 points, right? From here to this, that's 128 points. So 99 points puts us like 38, 39, 80 something. Yeah, like 39, 80 something. So I mean, again, that's just hypothesis, but that's kind of where I'm looking. I'm not trying to give like an absolute direction, because I'm trying to stay away from that. That normally doesn't help me, even if I'm right, because there'll be times where I'm like, it's gonna do this, and then I'm right, but I still have a losing week. So it doesn't make sense to be right or to be like, I said it, if you're not really profiting from it. Yeah, not really much on the indices right now. I just have I'm trying to work on like a layout for the day, just to have like all the times marked off and stuff. But yeah, I don't really need that green candle, but we'll just see what 8:30 gives us. But I don't really think I'm missing anything here. On a dollar now, right? Inverse correlation. It's gone weekly. Weekly, we still haven't drawn into this fair value gap. I mean, we kind of made a leg there, but we haven't yet. I mean, we kind of broke out the range, but not really as dynamic as I'm looking for. But that makes sense, because the dollar is also ranging and waiting for GDP, right? So yeah, nothing really there on the daily, on the 8-hour, and the Wi-Fi is bugging. Okay, Yeah. Okay. So 8 hour, still nothing. I think I could delete this. I don't really need that right now. Still nothing on that. 1 hour. So yesterday we drew into these two gaps that I had. That was pretty cool. So I don't think I need them. I mean, I'll still keep them to see what price does in that area, but we're still looking at this larger weekly gap. But now we're back up into a 1 hour breaker that we revisited already, but we're still in that area pushing. The last thing we really did was clear the liquidity on the hair, right? We swept that, this candle. Then we made a higher low off of that, and now exploded away, right? So, I think, yeah, shifting structure here, right? Shifting structure here. So, I think that means that we're trying to seek out. I think the dollar's trying to move higher. I'll have to watch like the live divergence because I normally just look for like, or I'm beginning now to look for like a sell model in dollar most likely means a buy model in indices, and then vice versa. So if it's actually running higher, then I'm looking at these areas for it to tag, because if it's shifted delivery, then highs are now targets. They're not really going to act as stopping blocks anymore. They'll be where it wants to seek out. So I'll just do those first three layers depending on today's range, but between any one of these I'll be looking at for it to hit. Let's go on to 15 minutes. Nothing. Let me see. Okay, yeah, so we created a range that we just broke out of. So we broke out of this range high. This range low is still intact. So we had this range. Outside of that range, it would have been external liquidity, and we played with internal, right? Because we just basically power of three. We accumulated here, and we manipulated lower, and then we distributed. Because I'm sure that little up down is a OTE. You see, it most likely is, but yep, there it is. So we accumulated, we manipulated down, and then we OTE'd, and now we're blasting off, right? And it's kind of like a pseudo buy model, I guess, because you see that once we swept the liquidity and then OTE'd and broke up higher, now we set this high with this gap, retrace into that gap, right? And then exploded higher, taking out this high. And then we set this high with this gap and this one here, retrace into both of those, and then expanded higher. So it's hunting or seeking out buy side liquidity, in my opinion. So I guess that means lower prices today on indices. I don't know. Again, not really trying to be speculative, just giving the options to look for. But that's kind of really it. I don't really think I have much more. I'll just have to continually watch this with the indices to see what I'm seeing. Because yesterday was pretty cool because it had a sell model, right? But I didn't fully trust it. And this delivery of it was clean compared to the indices. The indices was a little sloppy. Like barring the short at open yesterday, New York Open, like the long I was trying to go for, even if I actually held for the whole move that I was looking for, like it would have been bad. It would have been like back and forth, chop up 10 points, down 10 points. Like I'm not really trying to go through all of that. So I'm basically looking for one of these to form. Either this or flip your phone or whatever upside down, or the buy model version of it. That's all I'm looking for really on this. Because if this happens, then the indices will go in the opposite direction. So hence why this is exploding upwards, but indices are selling downwards, right? But we'll see again. Anything else? I don't think so. Let me see what the VIX is doing. VIX is, to me, the VIX is kind of hard to read, but okay. Well, honestly, it's a high news week today, so we're probably not gonna go. Even though it looks like it might go lower, I don't think we're gonna go that much lower. I think the VIX might have like a pop into these highs or something. Up at 29. I'll just monitor that. Honestly, I don't really care what it does. What was it? Nike, right? Their earnings, they beat earnings. Why is it not showing me that? Okay, yeah, so they beat, right? But we're down here at 107, and I had that's the thing. I had their calls. I had their calls on my watch list, and I was like, I should enter those before earnings. But I was like, I never played Nike, so I don't know like what it does. So I'm not gonna enter and not know what I'm basing my entry on. So I'm glad I didn't do that, but I still don't think this down 107. I don't think that's the actual move they're trying to do, because again, these highs up here are too clean. These highs up here are too clean at 120 something. I'm still observing it, still watching it, just to see if my my RTO thesis on it is right. That we're not really breaking structure down. We're just returning to origin before blasting off. But I am watching it closely though. Okay, I think that's kind of it. I feel like I'm rambling on now. That's all I got. Yeah, that's it.